Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 12th of July, 2021. Thank you for tuning in. So I'm glad to have you guys here. Let's get started. Let's open up the charts right here and take a look at this. China, right now, their growth is slowing after the pandemic peak, and their credit growth is really slowing off. It's you can see by this chart, there's a big drop in China's credit growth. Uh, this does affect the whole entire world's economy. And yes, it's deflationary. It's another thing. I've been pointing out several things yesterday about deflationary things that's happening in the United States, including them cutting back credit on the banks, especially Wells Fargo in particular. They're cutting off credit to a lot of their customers, and they're a big bank. I think they're one of the three largest banks in the United States. And so, also, the Fed, with their a reverse repo operation, draining liquidity out of the system. You got China draining credit of their system after they had a peak. Credit's dropping off. There's a money squeeze going on right now. Hasn't really touched the markets yet, but this is a time when the economies of the world need a lot of support, not cutbacks, not squeezes of credit. Let me open up the charts right here, and we're going to see if I can get them to a normal size. There we go. Well, not quite. Just a sec. I'm having a little bit of trouble with this chart right now. Giving me problems. There. I guess that's good as I'm going to get it. Let's move on now and take a look at this article right here. This chart, for some reason, why is software has to be so difficult sometimes? Okay, crushing heat wave in Pacific Northwest and Canada, cooking shellfish alive by the millions. There's a picture of dead shellfish, It says, after the crushing summer heat wave that slams the Pacific Northwest of Canada, a marine, Alicia, a marine ecologist who lived near the sea in Vancouver, BC, walked down to the shore for a swim. As expected, the beach was packed, others looking to beat the heat. She made her way to the edge of the water, and it smelled like putrid shellfish cooking. All around her, beds of mussels had popped open, dead. The heat had beat down on the rocks and killed them. I'm going to tell you, they're saying millions, probably billions, of these shellfish are dying off. Well, a lot of you guys out there are saying, well, what's the big deal? I'll tell you what the big deal is. The world's ecosystem is extremely fragile with temperature shifts. It can go to extremes like that. And a lot of the oxygen that we breathe in the atmosphere is actually produced in the ocean. That's where it comes from. A lot of people think, hey, it comes from the trees. No, it comes from the oceans, And if these heat waves continue, they can kill off phytoplankton in the ocean, And it's a big danger for our oxygen levels, because each time our oxygen level were to drop maybe 0.5% or so, the world, basically, people need to breathe. There's several things that people need in the world, in order to survive. You need to eat, you need a drink, and you need to breathe, And breathing is a constant. And if the world's oceans produce most of the oxygen, and if the oceans are dying off rather quickly now, we got a major problem out there, So this is just one of the things. But another thing that they pointed out in this article, in this British Columbia heat wave of 121 degrees, it says British Columbia reported at least 719 people suffered sudden and unexpected death. They just dropped dead in the heat. So listen, guys, this heat might come back in like August and stuff. You gotta not just stay hydrated. If you're drinking a lot of water, the salt's going to flush out of your system from two different ways. Water will actually flush, if you drink too much of it, it'll actually flush your electrolytes out. And that's what this heat does too. It flushes your electrolytes out. And mostly what causes a sudden and unexpected death is your body has an electrical system, just like your car. You ever go out and get in your car? Everybody's had this experience. And you go to start it, and all of a sudden the engine just goes row, 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 row. Your battery's dead. Everybody's had that experience at least once in their life. Or they've been with somebody and they've gotten a car and the battery goes dead. Well, your heart's got an electrical system too. And your heart keeps beating on these electrical impulses. Boom, 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 boom. Well, if you get your electrolytes, it's part of your body's electrical system, too low, the heart will just stop beating. It can happen suddenly. It's called an electrolyte imbalance. Very, very serious condition. You go to the hospital. And what can cause an electrolyte imbalance is sweating. You're sweating out the salts. See, your body actually works like a car battery, sort of. A car in the way that your body has these electrolytes, which are basically body salts that help produce the electrical energy in your body. And when you're sweating a lot, that gets flushed out. It can cause abnormal heart rhythms. You got to restore that when you're sweating a lot. Drinking water alone just won't do it, because water actually flushes electrolytes, especially if you drink too much water. What you need to do is restore the electrolytes. A simple thing is Gatorade drink has electrolytes in it. And they put it in there specifically for athletes who sweat a lot to restore those electrolytes. So that's a simple way. It's just to buy some Gatorade. But an awful lot of different types of foods can restore your electrolytes too. Like, take for instance, a can of Campbell's chicken noodle soup is absolutely loaded with electrolytes. You know, there's a number of mostly salty. A lot of salty foods like potato chips are great. If you got nothing else, grab a bag of potato chips. That'll help restore your electrolytes. And keep your liquids up too. When you got a heat wave like that. But the tendency is you get over thirsty during a heat wave like that. And that, if you're just drinking water, that tends to flush the electrolytes along with the salt. And the two things coming together can take your electrolytes dangerously low really fast. So you got to really watch out for that if you get heat. Okay, on to other stuff here. We're going to take a look at the gold price today. Gold's at 1805. It's down $2.80 on the day so far. Let's take a look at silver. Silver's at 26.20. It's up 13 cents on the day. Now let's take a look at cryptocurrencies and see what they're doing. Look at it, 1,391. 1385. So it's dropping a little bit. 33,472 for Bitcoin right now. We're going to take a look now at the Dow Jones. Dow Jones Industrial Average is 34,985. It's up 88 points on the day. We're going to take a look now at crude oil, 74.05. It's down 51 cents. Now you guys know I'm kind of waiting, expecting the markets to crash, unless we get a big injection of liquidity in. This whole thing's went exponential now. And you've heard me say that a lot about exponential. Well, it goes back to around 1914, excuse me, when they set up the Federal Reserve. They started a Ponzi scheme. And Ponzi schemes follow an exponential. They have to borrow all the money into existence. what we call money, which is actually credit and debt. They have to borrow it into existence. And when they borrow that money into existence, they create the actual debt or money instrument, which is the dollar. They create it, but they don't create the part of the dollar, which is the interest, which is accruing. And accruing that's when interest builds up. It's called accruing, and I can't pronounce it properly. But as that accrues the interest, it's on an exponential. It's the same thing, if you were reverse that. If you guys had a bank account, and you're putting money in there and collecting interest. As time goes by, it mounts up bigger and bigger, right? The interest. That's accruing. And so because this interest on the outstanding debt is accruing, they always have to borrow more and more and more to keep up with the interest. Now at this point, it's gone off the charts, off the Richter scale. And that's why it's in a hyperbolic. It's going straight up now at this point. They have to keep borrowing more and more and more, and the dollars are worth less and less and less, and it's like pushing on a string. It's becoming not effective anymore. And this is why we're on an exponential. And what they have to do is the money that they inject into the system is lasting a shorter and shorter duration, and they have to inject more and more in. And if they don't keep injecting more in, all of these bubbles are going to pop. And so my forecast for the economy turning over is actually pretty simple math. I just took a look at take a look at how long the different impulses of money and how big they are, going back to 2008. These basically money programs that they've had in place, like quantitative easing and on and on and on. You take a look at the size of them and how long they last, and how much effectiveness they have, and then do a comparison up till now. This is basically what I've done. And I get a good timing of how long that money's going to last that they just injected before it runs out. Now, that's not figuring in things like reverse repo, which drags the liquidity out quicker and can speed things up because it's almost $1 trillion, And so this is how I'm able to forecast when the economy is going to turn down again, going to need more money, and they're not going to give it. I know, I can tell you guys, unless a crisis or something happens, they have to have an impetus. They have to have something pushing them to give the money. They have to have a reason. They just can't say, okay, here, we're going to have a big bailout or whatever, unless they got a reason for it. So they're going to drift along until the COVID money, right? Basically, let's call it the COVID injections, run out. And I've got a pretty good basic timing of when they're going to run out. And then I also know that they're not going to do anything initially. They're just it's going to be hopium, hoping the markets will go back up when that money runs out and the markets start to turn downwards. They've sped up the process with this giant sucking sound that's come from different things like the reverse repo, because they got a little bit nervous and they said, okay, inflation's heating up, we got to do something. I know, let's drain some liquidity out of the system and replace it with replace the money in the banking system. And that's what they did. They drained it out. And the banks, instead of all having that big piles of cash, now they got things like treasuries and stuff, in exchange. Just the same way as if you got a big pile of cash on your table, but you go out and buy a car, now you got the collateral. You haven't got the cash anymore. You get the collateral of the car, and that's what the banks have done. And it makes them more cash strapped, then they can't make out loans and things near as much. And so this is where we're at right now. And so we're getting to that time. There's still a little bit of liquidity in the system, but we're rapidly approaching that time where we're just going to run out of money in the system. And that's when everything starts to turn sour and everything starts to go down and the bubbles start to break. And the bubbles are going to break until it gets bad enough where they say, hey, you know what? We got a crisis here. We got to do more money injections. It's like a silly game, that's going on. But it does affect everything within the system, including the price of gold, silver, and cryptos, which I know is what you guys are really interested in, a lot. Because an awful lot of the people that listen to my show, you've got some crypto or gold or silver, you know, and you're trying to get out of the system, the money system. You know that this is going to turn over at some point, and the dollar is going to start to really depreciate in value very, very rapidly at some point. You know that's coming. And you're preparing yourself financially for it. And that's a good thing. Let's move on and take a look at the MOVE index today. It's 59.92. Bonds and rates. What we're looking at is we're looking at rising yields, but it's not real big. It's 1 basis point. The U.S. 10-year is at 1.36, and the U.S. 30-year is at 1.99. And so they've moved up a little bit. I'll tell you what caused this big downward, well, probably what caused this big downward impulse in the treasuries is the fact of the debt ceiling coming in. And the government right now, they're the biggest issuer of these treasuries. Well, if you're not issuing as many of something, then that creates a little bit like of a shortage of them. And when that happens, then yields fall. When there's a little bit of a shortage of treasuries. So what happens on the other side of that when they settle this whole big debt ceiling thing? Then they'll issue a whole bunch of new treasuries, and yields will rise on the other side of that, So we've got these suppressed yields right now. U.S. 10-year at only 1.36. It's surprising to me that gold's not going someplace with the U.S. 10-year only 1.36. That doesn't put a headwind behind gold. It's surprising me. Gold, is just sitting there with that happening. Dollar index today, 92.22, so the dollar's remaining strong. I think part of the reason why is what you see right here with the dollar remaining rather strong. Has its effect upon gold. The dollar is going to stay strong until the very end, and then it's going to die suddenly. And this is a confidence thing. The dollar is a confidence game. Confidence is going to be lost at a certain point. You can't keep this game between deflation and inflation with these inflationary impulses growing larger and larger and larger until they're going to push it over the edge. And that's going to happen suddenly when it finally happens. Thank you guys for listening to my show. Like and subscribe. We'll catch you guys in the very next episode. Bye-bye.